Let's now welcome the country's biggest banker, SBI Chairman CS Setty joins us. Mr. Setty, thank you very much. It's really kind of you to find time on what I understand was a very busy day for you. First up, improvement in margins for all banks for sure because of the CRR cut.
Yeah, thanks, Latha, for having me on your show. I'm sorry I couldn't join earlier. I think definitely there would be some marginal impact on the NIMs because this liquidity would definitely help. There's a good amount of liquidity which is made available by the CRR cut. I think there will be some improvement on the margins.
What are you getting in terms of a sense of loan demand, sir? Do you think that growth has genuinely slowed and it will take a little while for the uptick to happen? Can we get it as quickly as this quarter, this month itself, or even next quarter, or do we have to wait?
It all depends on where the credit growth is coming from. I think I still see we have given a guidance of 14 to 16%. We seem to be moving in that direction. It could be that we have had a good strong pipeline of SME and corporate loan book, so which is getting converted into disbursements now. But my sense is that I think. I stated somewhere also is that Q2 seems to be a blip, and definitely Q3 will.
Loan demand has picked up.
Loan demand definitely has picked up, and obviously, this October, November months are generally the festival season, marriage season. There are certain products which really get into demand, like for example, auto loans, and these things do well. Home loans, particularly. People want to tie in on the home loans also.
And you're seeing that?
Yes.
Are you sure that deposits have peaked now, deposit rates, because this extra money is available and you will get, I think, a lion's share of about some 30,000 crore more to give as loans? Can you say that deposit rates will not rise anymore?
So deposit rates, earlier also we have not been fighting the deposit rate war. I think most of the banks have contained the rate war on that. My view is that this is not going to directly impact the deposits or lending, but essentially it eases the liquidity. So which brings down the market borrowing cost and also sends signal in terms of liquidity availability. And RBI always had made an effort, as the governor mentioned, that BRR, that system liquidity is made available. But this is is a great enabler in terms of not maintaining the CRR to the extent of 0.5% is a great relief for the banks.
I'm just trying to squeeze one more question. I have time. This collateral-free agri loans have been raised to 2 lakh. Does it get fully utilized, sir, or would banks still want collateral? I mean, just for your own safety.
So I think the regulatory mandated limit is 1.6 lakhs, up to which we are not supposed to ask for mortgage. That's what collateral. But banks were never stopped in giving collateral-free loans beyond 1.6 lakhs. But it is also a fact that large number of small and marginal farmers were getting only up to 1.6 lakhs because creating a mortgage would have been difficult for them if the banks wanted. So this limit, in fact, banks have been demanding that this limit has to be raised. I'm glad that RBI has taken this decision. In fact, our recommendation was that if there is a digitalization of land records and we can record our loan details in the records, we can even go up to 3 lakh rupees collateral-free loan. Hopefully, I think we'll still engage with our RBI, but there's a good step in that direction.
Last word, sir, on the policy. What stands out for you?
Obviously, CRR. We really got,
what you wanted.
One thing I didn't hear whether Prasanna mentioned about it. I think this SORR also is something what we've been looking for, because the the market moved essentially towards secured borrowing in the market, right? Overnight borrowing. So this is a benchmark to set up with. And maybe, some of us probably would look at lending at SORR now as a benchmark.
Okay. So that was my bad. I didn't ask Prasanna. But thank you very much for filling in and telling us that this is a new instrument at which you all will be lending secured loans. Thank you very much. Thank you very much, Mr. Setty, for joining me. So that's the policy for you from 4 of the best voices in the market and in the economy, saying that kudos to the Reserve Bank for cutting the CRR. Repo rate cut expected in February, but some doubts about whether even the 6.8 and 7.2% growth for Q3 and Q4 can really be achieved. Let's wait and see. Thank you very much for joining this special broadcast. Do stay with CNBC-TV18. We have lots more lined up for you.